Cheryl Obermiller from Obermiller Construction in Missouri on part 2 of our 10-part series on top 10 reasons having a great bookkeeper could open you up for embezzlement. And again, as we talked about before, Cheryl is a victim of this, and it ain't fun, folks, to have the FBI and the IRS breathing down your neck. So I'm telling you right now, Cheryl and your businesses are not IBM, they're not Walmart. You can get fraud, you can get embezzled a whole lot quicker than those guys can because of the lack of preventive and detection maintenance. All right, number 2 is you don't know how to read your financial statements and never verify the information that goes into them. But why would you need to do that, Cheryl? That's why you hire people.
Well, because, and I do want to clarify something, because you introduced me as a victim of embezzlement. And I tell people that I said that for about the first year while I was digging through everything, and it made me really depressed. And I finally said, I'm not a victim of anything. I had an experience, and whether it's a good or a bad experience is totally up to me. I mean, it sucked. I'm not going to tell you that it wasn't difficult, but it made me a much better business person. I wrote a book about it. I've helped a lot of other people learn more about it. So I tell people now I'm an embezzlement survivor, or I experienced an embezzlement. So I just found that it really helped me to look at it and make something positive, just to say I experienced an embezzlement, because I'm pretty bossy and belligerent, and I don't like feeling like a victim of anything. So
that's a good point. And you have the fraud points is right over your right shoulder there. So that's a wonderful point too, to say, look, I'm not a victim. You know what I'm saying? I went through this, and I'm a better person for it. No, right on, Cheryl. Absolutely.
All right. So why would you want to know how to read your financial statements? Because for most accountants, let's say your accountant is keeping your books, but you're going to hand your company records over to a CPA to do your business taxes, which I would advise. Business taxes are complicated. Have somebody that's a tax expert do it. If you're running a business, don't just print them out on an online service. Get somebody to do it. So those things have to be passed to somebody who's going to review things. So your bookkeeper, your accountant will need to make your books balance. Now, the financial statements are where a lot of the evidence of a fraud will show up. Let's say your accountant is stealing $2,500 a month. And what she's doing is she's hiding that theft, because your books have to balance. The credits and the debits have to balance, and the CPA gets really fussy if they don't do that, and they'll come and dig for things. So your accountant will, if they're smart, they will make those things balance. So they will likely take money that they are stealing and allocate it to another account within your accounting system. So let's say you are a woodworker, and you buy a lot of you buy raw material. Wood's your raw material, and so you buy a lot of that. Well, your bookkeeper knows that you buy different kinds of woods from different people multiple times a month, so there's a lot of transactions. So that's where she's going to hide her embezzlement. Well, you should be able to look at that and say, so 6 months into the year, we've spent $15,000 more on wood than we did last year. I haven't seen a big increase in unit price.
Exactly.
Our revenues are the same. And so financial statements are frequently where if you're paying attention, you'll see that things just look kind of wonky. And you should be able to know kind of what your expenses were. My accounting system, I can go in and say, I want to look at all the transactions from February 1st to February 28th, 2021, and I want to compare them to 2020 and 2019. And I can look and see, here's about how much business I did. Here's how much I spent on wood. That's okay. It's okay. Whoa, this year it's up 27%. What's going on? So you should pay attention to your financial statements. And again, we talked in the first segment about boring paperwork. Nobody looks at their financial statements. If they do, they scroll through the pages and they go, oh, look, there's a positive number at the bottom. I like that number. And it's like sausage. You don't care what goes into it, as long as what comes out at the bottom is good. So know how to.
Cheryl, it's interesting because when I'm running financial planning and we run the cash flow scenario, sometimes there's a major discrepancy in a year line item. I'm like, whoa, and you just reverse engineer, say that doesn't make sense. What causes this? And you
Right.
go and say, oh, okay, we had it for, maybe we fat finger something. Maybe we had it for monthly instead of annual, whatever it is. But then you just fix it. But if you never look at it, it's going to screw up everything. You
Right.
got to look at it and find reverse engineer. Like you said, 27% increase. That doesn't make sense, especially
That's
when revenue isn't going up like that. So
well, and I always talk about I have 8 kids, and so I learned to manage a company
yeah,
from bossing 8 kids around,
right,
and you know perfectly well that if you tell your kid, yeah, you can go play if your room's clean,
right,
and your kid knows that if you're really busy,
right,
you're doing an interview, you're really, really busy, and they say, Dad, I cleaned my room. Can I go
right,
play now? If you're really busy, you're going to say, did you clean your room? And they're going to go, yeah, I
right,
did.
right,
And
right,
they know you're probably not going to look, or they know that maybe you'll stick your head in the door and
right,
just see, okay, every wretched, stinking piece of crap they don't want you to see is in the closet,
right.
it's
Yep, yep.
in the
Under the
bed.
bed. Yep.
You never look there. Your employees know,
Yeah,
I promise you, your employees know where you look and where you don't. If
yeah,
they know you've never looked at your financial statements, you've never questioned them and said, why was our professional services or our materials, why have these things gone up? And
yeah.
you shouldn't even ask them. You should be conversant enough with your accounting system to go in and click on that item in your financial statement and see every transaction that went into that.
So, what are some homework assignments or tasks that people can do to kind of say, all right, let's make sure this doesn't happen to me? What are some guidelines that you would tell people? Say, do these, and you'll be more inclined to catch a predator.
Well, for one thing, if you haven't ever looked at your financial statements, print off like 3 years worth and just look at them. Just read them, kind of get a feel for what's familiar and what's not. If you see any wild discrepancies, particularly if you see wild discrepancies in outgoing money that doesn't correspond with incoming money, then you know that your costs are not up 27% because you did 27% more volume. Then just kind of get a feel for what is in there. And then you want to start looking at your current one on a regular basis.
Yeah.
Click on it, look and see what went in there. Make sure things haven't been misallocated. Sometimes accountants will make mistakes. Look and get a feel for what all of your materials costs, your professional services. Find out if all of a sudden, unbeknownst to you, you're paying $2,800 a month for landscaping services, and all you have is a parking lot and a flower pot, but you know that your bookkeeper's brother owns a landscape service.
Say that you're 100%. Exactly.
And so the financial statements are not preventative in terms of fraud. You're not really preventing, it's not that kind of a control, but it will allow you to detect things. And so you definitely want to look at those. You also want to periodically, if you have a question about something in your financial statements look weird, why have we spent this much money with this particular company? You should be able to go in, do it in an evening. I wouldn't ask the bookkeeper to pull these things up for you. Go look yourself. Go look at the receipts and see, do I have receipts that correspond with these purchases? And I can see that something wasn't misallocated, because the bookkeeper can bury something in your materials cost that if you go in and look at the actual receipts for materials, you may not find any receipts for those materials. That means you have a problem in that you need to start looking. And I do, before we move off of the financial statement topic, I want to be sure that owners understand something really clearly about the danger of wrong financial statements. Number one, if your taxes are filed based on this wildly incorrect information, you show that somebody else prepared it, you're not going to go to jail, but you're still going to owe all of the taxes and penalties and whatnot. Keep in mind that your tax preparer, and you should go look in their contract, I promise you that they will have something in there that says we have the right to rely that the information that you've given us is correct.
Right.
They will tell you if they see something that blatantly looks like fraud, but it's not their job to come to you and say, why did your material costs go up?
Right.
They will rely on your supervision to make sure the information you give them to file your taxes is correct.
That's their job. That's literally their job. Yeah.
Right. That's not their job. That would be like somebody getting mad at you as a financial planner because their checking account didn't balance and somehow that's your fault. You're like,
no, I mean, that's their job is not to go into say, hey, why did you pay this? Why did you pay that? Their job is just to make sure the books are balanced. You know what I'm saying?
So, and then the other thing you need to keep in mind, and this is a real danger for an owner, when you provide your financial statements to a bank or to somebody to obtain credit, usually your business insurer will want to see financial statements. If those statements are fraudulent, if they are wrong, you get your interest rates and things on loans, you'll get insurance rates will be based on a lot of these things. If that is wrong, number one, people are taking a much bigger risk on you than they thought. Number two, if you get embezzled or something comes out that your financial statements were wrong, your bank can call all your loans in, they can skyrocket your interest rates, and worst case scenario, if somebody could try to make a case that you were either part of the fraud or were so negligent that they may sue you civilly. If your company would default on a debt based on an incorrect financial statement, you can be sued civilly for those things. So your financial statements are one of those things that it's like nobody really wants to look at those. You should look at your financial statements.
I like the 1040. I mean, if you look at people actually look at their tax return and they have no clue. They just, and I, as a financial planner, I'm sitting there thinking there's so much information in here. If you don't look at it, you'll have no idea in terms of qualified dividends, income, and long-term capital gains and ordinary interest. And all that stuff goes back into your financial plan from a tax perspective. And very, very few people do it, Cheryl. And you're just like, man, you don't know what you don't know. And ignorance is not bliss, because at the end of the day, you're not going to go to jail. But if you're running a business and other people are relying on those financial statements, it's almost like when you do life insurance. And I think it's like in the first 6 months or something like that, they find out that somehow you smoked when you said you didn't smoke or something like that. Lots of things get,
or you're a skydiver.
Exactly. Yeah, they'll say, hey, wait a second. 100% right. That's there's a rule that they call that within the first 2 years. I forgot what it was, but.
Well, and something else that you should look at while you're looking at financial statement stuff and you're looking at some of the, the boring stuff.
Yes.
Look at the list of people that you send 1099s to, which is, if people know what that is, you do business with my company, and at the end of the year, I submit, it's almost like a W-2 form for a business. So I send that to you, and I also submit it to the IRS. Look at your list of people that you 1099. It's really simple. You just look at them. It's in your accounting system. And then you go to that vendor's account and you see if you really received the same amount of money that you're sending them a 1099 for, because if somebody's stealing the money, it may not match. They may have in your records a much lesser amount of money because you're not going to figure out that they stole that money. But the vendor may catch that, hey, we paid you a lot more money than this.
Right.
And this is going to be a problem with our taxes because, this doesn't balance. So look and see if the 1099s that you submit are equal to the amount of money that you received from your vendors or from your customers. So, and that is fraud point number 2. So look out for it.
Right on. Good stuff. All right. Hold tight. We're good.